This is the Southside School of Financial Freedom Watch List and Market Report for the week ending October 17th, 2020. Our question this week is, what is the number one problem with 401k plans? The answer will be provided later in the video. The market does one of three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways: economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was up. Actually, it was flat, that is, relatively the same. The Dow Jones Industrial Average increased 0.39% on Friday and was up 0.07% for the week. The S&P 500 increased 0.01% on Friday and was up 0.19% for the week. The Nasdaq fell 0.36% on Friday, but managed to finish up 0.79% for the week. Looking at the week, we can see that there were 10 down finishes versus 5 up finishes for the indexes. All were up on Monday and all were down on Tuesday, Wednesday, and Thursday. The divergence came on Friday when the Dow Jones Industrial Average and the S&P 500 squeaked out gains, but the Nasdaq finished in the red. The new unemployment claims were reported to be 898,000 versus 830,000 expected. Continuing unemployment claims were just over 10 million. Stimulus negotiations with Congress is still ongoing, but the U.S. Treasury Secretary Mnuchin stated that getting a deal before the elections will be difficult. Johnson & Johnson suspended their coronavirus vaccine trials due to an illness of one of the participants. Eli Lilly also suspended clinical trials of their coronavirus antibody study due to safety concerns. Retail sales for September were reported to be better than the expected, and Apple introduced their new line of iPhones. New unemployment claims, stimulus negotiations, coronavirus clinical trials, retail sales, and new products are news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers that be is Congress. Politicians will do what they must to drive the stock market up. However, sometimes they want to suppress the market. Congress is delaying a stimulus deal. They are playing hardball to hold the market at bay. A high stock market is deemed to be beneficial to the president. Democrats, Nancy Pelosi, does not want to give the president a perceived win through a high stock market. Do you own any stocks? Do you own them through a 401k plan? Which brings us to our question of the week. What is the number one problem with 401k plans? While there are a lot of problems with 401k plans, like hidden fees, limited investment options, profit theft, and difficulty in accessing your funds, the number one problem to me is that 401k investment plans only make money when the stock market goes up. When the market tanks, and it will fall someday, all 401k plan holders, especially you 401k plan millionaires, are going to be very sad as the value of the 401k plans tank and it may never come back. The stock market does fall from time to time. It does have an upward drift, and the rich and powerful are not generally going to let the market stay down for long. However, one day their manipulative tricks will not work, and it may take a decade or more for the market to make a comeback. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending October 17th, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Peloton, the interactive. It is ticker symbol PTON in the second column. It increased 6.75% for the week, though it was down 3.74% on Friday. Peloton is an interactive fitness equipment company. They produce interactive exercise programs and equipment like the Peloton bike and the Peloton tread. Peloton is up more than 362% year to date and reached a new all-time high this past week. Will it continue to reach new highs? I don't know. I have never traded Peloton, but I may trade it in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside trading strategy. The Southside strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers and 401k plans do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of October 17th, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. Year to date, my portfolio is up 19.6% versus 7.57% for SPY, a difference of 12.03%. I am beating SPY by 12.03%. This week, equities, including puts, calls, and ETFs, make up 76.04% of the portfolio. Cash is 23.96%. The cash flow generated for this week was 1.43% of the portfolio account value. The account value changed by 0.31%. Meanwhile, the S&P 500 ETF SPY changed by 0.16% this week. I sold option contracts on 5 positions this week. They were all puts that range from $236.69 to $573.36. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside Schooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street, by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.